So I started reading some articles about different tips on insurance and sales and over the phone, and I came across a pretty good one from Blogspot that's titled 15 Science-Backed Tips for Making Better Sales Calls. Now, I will give it to them. They have some of the best hooks, and that's one of the reasons I like reading their information, but then they go into opinions and not science fact things. So we're going to dive into it a little bit more in depth, and I'll give you what has been successful for me, someone that has written several $1 million worth of personal lines insurance. They start this article off with the first piece, which is starting the call off with a bang. It really makes sense. This is actually a really good piece because you do want to start the phone call off. When they say bang, that sounds kind of like an aggressive tone, but it's the opposite. It's being welcoming. Hello, how are you? Oh my goodness, it's good to talk to you. Oh, how have you been? Even if you've never talked to them. So you kind of create some quick rapport with the person because this is phone sales and you're just starting to talk with somebody. The second piece is just common knowledge. They talk about going over and not bad mouthing or bashing other companies and their processes. There is a time to do that. So there are places where you can, but what I recommend is don't. Even though there's spots and there's tons of stuff where you can kind of pin that customer to pin their company in a corner to just get them to want to leave, you don't want them to buy out of wanting to be angry at one company because you're just going to filter that into your company. And so there are ways to let the customer decide that they're upset with their company, and we need to have them come up with those talk paths, not you. So how do you do that? How do you get the customer to be frustrated with their company? Well, usually they are because they called around because of usually an experience. If you follow any of the podcasts in the industry and any of the articles and whatnot, or if you're just starting to watch this channel, which is going to give you that information, first of all, subscribe below. Thank you. Like the thumbs up there, smash it for the algorithm, whatever. The topic that they constantly talk about is when a customer is upset, it's because of usually a claim. So it's like 70 some odd % of all of the reasons customers leave is not price. Price isn't really the main factor. I think actually they say 11% of the people leave a company is because of price. Now, if you're constantly getting that rebuttal, that is the type of client that you may not want to deal with in the first place. So you might have to rethink some of your marketing or some of your tactics or strategies so that you're not always doing that. I get it. Almost every phone call that our reps go through and I've done in the past has been around price. But once you start to learn how to do what we call value-based selling and you realize the pain points that they really have, whether it's a claim or they had a coverage that they thought they had and it was different, they didn't have enough coverage, or just the person was rude to them. There's a lot of reasons that customers leave. Price is a piece of it. It's what can tip that scale into your favor or against you, but it also has a lot to do with the relationship and the talking paths that you have with the person that's on the phone as well. The third piece that they talk about is giving labels, and that's pretty vague. What they end up talking at the bottom of this article is the official labels. For example, they say, you're my best customer. You're such a great person. I think you're a really good fit. And I didn't do a whole lot of this, but I do know that when you do it, if you're comfortable doing it, you will find that people do open up a little bit more. I've had several times where I've had a talk path with someone and I'll explain to them why things are higher or why things are different, but then I'll also explain that we want their business. I'll give you a really good example. Hey Joe, I understand that the price is quite a bit higher. I know that you wanted $0 deductible on the glass and we only have 100. I get that part, but to be honest with you, you're a really good fit for us. Otherwise, I wouldn't be going through the rest of this quote just to give you the information. I think that because you're, because of where you're at, the type of policy that you're looking for, I've got several companies that are going to be a really good fit for you. So let's go ahead. Let me try to at least get you some options, and then you can let me know what your thoughts are. At the end of the day, what you're doing is you're telling them either something they like or don't like. It's holding them in one arm, punching them with the other, right? So you're comforting and aggressive. You can't tell them what they don't get. What that in turn ends up being is that you have to find ways to let them know that you want to stay connected. Set the agenda and stay in control. Yeah, it makes sense. I train to this a lot. I just tell customers or employees that it's a timeline and there's a talk path. You need to, one, set the expectation of what you're going to do through that talk path. It's about a 10 to 15 minute call, sometimes 5, sometimes 30. It really just depends on the needs and how the customer wants to talk about those. But that talk path goes up and down. For example, you're going to have a lot of memories come up if you're asking questions about things that trigger thoughts that they've had in the past. Oh my gosh, I had a road claim and this was this. And then it goes off and then you've got to pull them back down. Let's get back on topic and find ways to do that. Now, I'm not going to get very specific with those pieces today because that'll be something that's part of a larger video or even a training piece. So once again, if you're interested in finding more of those specifics, don't forget to subscribe. Part number 6, they said emphasize wisely. That's a given. You really want to know what words to emphasize. You don't want to talk about excitement about a claim or something that's negative, and you don't want to underplay something that's powerful. And that's where I get a lot of customers, a lot of people that I train, is that they have monotone voices or they don't get excited for any reason. And a part of it's posture. So if you're going to lay back like this and talk on the phone and you've got a headset and yeah, how excited is that customer to talk to you? What's the experience that you're giving them? If you're right here ready to go, I know you want to play on your cell phone, you want to do a game while you're waiting for a phone call, or if you're trying to drum up business, you're used to hearing the phone ring and ring and ring and ring, and nobody's picking up. The last 3 guys told you to go screw yourself and hung up on you. One person says they don't live here or they're not alive anymore. Whatever the case is, you've had a rough time, and you're going to fall in these slumps. But you've got to be ready because you don't want to miss the opportunity for the person that does need your help and wants to work with you. Number 7, simplifying options. Completely agree with this. You just need to make it simple. One of the ways that I've helped some of my trainees when they're going through licensing is I find ways to make the coverages relatable. So with us, we typically say coverage for you, coverage for other people, and coverage for your vehicle. We break it down into 3 parts, and then we go into specifics on what those parts are. Number 8, they talk about adopting smart product positioning, and that's just the way you talk. So when you're talking to customers, when you're explaining prices, and you're giving that quote price out, you don't want to make it sound, or you want to try to stay around a certain premium. For example, if you find out that they pay $1,200, how much does it sound if you say that's $1,150 versus $1,022? Now I know you can't control the prices, but sometimes there's companies that you can tweak and find better fits where that $1,022 sounds several $100s away, even though it's not even $200 or even $150 more versus that. You're talking about a basic difference between one price to the next. You can do that with all sorts of things. So it's kind of like a mental game that you're playing in your head. Is like, okay, what does this customer respond best to as far as the prices and premiums? Now I know this channel has a lot of customers on here, so if you're watching this far, thank you. I hope you get some good advice out of this. The other part is the agents shouldn't be using these as scamming points. These should be talking points. You would be so shocked how many times I save somebody $800 to $1,000 that had no intention of switching, and at the end of the whole call they're like, okay, thanks, and then they just hang up and you call it back and they don't answer. And I'd love it if you are the same. To let me know below is we're indecisive. We don't trust what we see, and sometimes that it's too good to be true, and we see coverages and we hear them and we're talking about them, but once they're said and there's a certain price point where it's too cheap, then we get worried. Like, what am I missing? What's going to happen? Am I going to lose my house if this happens? If this claim goes through? Are they actually going to pay? So we've got all these questions pops up. Positioning is more so used for the customer that kind of helps them feel the difference when you don't want to sound too low. And it sounds crazy, but you sometimes don't, where you're going to jump right into different additions that they can add to their policy. But at the end of the day, you know they're probably going to go with the cheaper one. But it helps you position so that you don't sound like you're trying to rip them off. Even though they're getting better at the same coverage, it's hard for a customer to understand that there's profiles. And each profile is a good fit for specific companies. And a lot of the times they're with the wrong company. So if you put them with the right company, they're going to save $800 and $900, which is what we typically do on average when customers switch. Number 9, get emotional. I don't really do that a whole lot. I'm more of the quick go through. I do connect somewhat. If you're gonna cry, I'm not gonna cry with you. It's just part of my nature. Actually, it's funny because I had an employee that said, I'm gonna put on my girl tears, and I'm like, oh, I live with 7 girls, so good luck with that one. I'm going to tell you to pick up your, big girl pants and just keep going. So there is a lot of emotion that you can put into it. That does lead back to that part where you have the right words that you're saying, you're empowering them, but it's also understanding what people are feeling. You don't have to necessarily be 100% in motion with them, but you can at least either agree to disagree or agree with what they're talking about, but you need to voice back that you understand their pain points and what they're talking about. Oh, okay, I get it. Like when you had a claim, your dog didn't make it, that's got to be really sad. I definitely don't want you to go through that again. Do you have a new dog? Oh, you do? Okay. Well, let's make sure that we get some sort of pet coverage for this. Fortunately, you can't take the loss back, but at least you can financially be put back to where you were from this whole fiasco. So that's where this article kind of branched off a little bit, where they talk about using that emotion, and they're explaining that that's a piece that customers really need to kind of move forward. And they're like, oh, if you can hit those emotions, that you can gain them as a customer. And I think it's the opposite, where if you can at least acknowledge the emotions, but go in the right direction, I think that alone is good enough. Number 11 is the empowering customers. Very, very good. You want them to make the decision. We talked about this earlier, I think on number 4 or 5, where you leave it in their court to decide what's best for them. When you're explaining coverages or you're explaining what the policy is about, and you really want them to buy it, but you can't just out front go into it. You need to, one, you do need to ask if they're going to purchase it, but you need to find them to understand the fit. That's that value-based selling. If they don't see value in it, or there's not a big enough savings, then they're not going to typically move forward. They're just going to ignore what you're going through. That's one of the reasons I've been so successful, is because I've grown in the sales industry before insurance. I was selling pretty much my whole life. What I found was that when you find that need, but more so when you can have that become their idea, you just need to explain things in the way that they get it and they understand it. And once they pick up that realization that, oh my goodness, I've been missing this whole time, then they typically want to make a move sooner rather than later. Number 12, there's a time for everything. This one falls back and it instantly brings up a training that I watched on YouTube from Grant Cardone, where he's teaching a new sales rep how to make a phone call. And he goes into a very powerful piece where he talks about, what are you trying to do on this phone call? And at the time, the guy was trying to set an appointment for a time to talk. And so he's pitching the coverages and he's pitching the company, he's pitching all this information when he doesn't really have their interest. It's just like being a kid and you want to get your parents' attention. You don't just jump into the conversation. You need to get their attention first. So you need to, one, make sure you've got the attention, and two, make sure that you know what you're looking for on that specific call. Am I trying to set up a meeting? So should I go into coverages? No. Hey, I want to see if you're interested in this because I have blah, 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 new rates, better area, blah, whatever the case is. And so, oh yeah, I would be interested. Great. When do you have time to talk about it? Right now? Let's do it. Or 5 o'clock? Great. I'll set up a time for 5. Number 13 is called served hot, not cold. And that one doesn't make sense to me. They talk about cold callings dying, which I can see that. There's robot dialers, and now there's dialers that catch robots and make fake answering machines. I love them. But there's also now a lot of call centers. So what leads have turned quickly into is not just buying a lead, it's buying a lead that is live. And it's expensive, but it can in turn grow your business faster simply because you have a live person on the phone right now. And if that's the case, and if you're really good at doing those pitches, I would say that's a great route to go. If you're not honed in on your talk path, you haven't gotten your script created, you don't have a foundation. That's the part that I'm working with as far as teaching you guys, is having that foundation. If you're not prepared for that, you shouldn't be buying those leads. You also will struggle with cold calling. It's kind of having that thick skin, as we call it, because you're going to have a third, and a third. A third that don't answer, a third that answer and tell you to screw off, and a third of them are going to be interested. And out of that third, you're going to have a third of those that may buy, depending on your conversion rate. So if you're getting a 3 to 5% conversion rate on cold lists and things like that, or web leads, and all of those purchasing systems, you're actually not doing horrible. But you will notice that articles and all these companies talk about doing some research, figuring out the people. Well, when you're in personal lines, it doesn't really pertain to you directly, because they're talking about talking to key planners and businesses and companies and corporations where you get a large volume. Here we're talking about individual people that want a home and auto umbrella policy. It's finding those people and getting the right advertising pieces that get them in the door. Word of mouth is always the best. Getting referrals from a mortgage broker is always great. You're going to get a 70% conversion rate on those versus your 3 to 5% conversion on those. The trouble is you've got to connect with them, and that takes time. It's building a relationship with multiple people. And a lot of that relationship is you sharing leads or sharing information, trying to get everybody to share with each other. Well, there's just not enough of them for you to share out. And at the end of the day, you got to have some sort of program or some sort of design where if you're going to market yourself or if you're going to purchase leads and whatnot, that you're going down the right path. Now, this is going to be a specific video that I do, and I'm actually going to train a little bit further on this, but I wanted to kind of at least touch base on that one. I don't agree that the cold calling is dead. I think that the right person cold calling is great. If you're not good at the cold calling part, it will not work for you. Observe, record, and predict. I don't know what they're talking about. I read the article. I can tell you what my piece is on it. So they talk about listening, and that's 100% true. You should be listening more than talking when it comes to coverages, when it comes to wants and needs. When you're collecting the data, they don't care what you talk about. You can go fast, you can go slow, you can try to build rapport there. I personally like to just fly through it. Hey, I'm going to go through a bunch of questions. I know you probably don't want to answer any of these because you did it 7 other times with 7 other companies, depending on the lead that you're talking to, right? So that's one type. That's I'm buying a lead. When it's the mortgage broker at that 70% conversion rate, I'm going to take my time with that person because they are not shopping around. They haven't called 7 other companies to find the best rate. They called probably one, which is their current one, or they didn't call any and you're the first contact. So I've got a lot more time and investment in that simply because it's there. There's a reason to invest the time into that. Not that people don't need it over here. Everybody wants it, the better deal. Everybody wants the better company. But do they deserve your time for it? At the end of the day, if you spend an hour with somebody that's not really shopping, I think it's best spent either finding other people to talk to or working on one that's a little bit more in depth that's likely to convert higher. The other downfall of doing it that way when you're talking to more of a purchase lead type is when you sell them fast, that loses a little bit of that loyalty. Because at the end of the day, unless they file a claim, that's where you're going to shine the most. That doesn't mean that they're bad clients. It's just the process that you're taking them through is figuring out which ones, even in this bucket versus this bucket. There are times when I spend a half hour to an hour talking to somebody here. It really just depends on the needs and the ability or wanting to move forward or learning that information where I spend most of my time. And that already answers number 15, which is the selling is about you. It's knowing where you're going to focus your time on, whether it's marketing, whether it's talking to customers, whether it's buying leads. At the end of the day, know the fit that you want. If it's a square peg, don't try to put it in a round circle. That means customers aren't always a good fit for you, and you need to know that up front. Now, when they are, is letting them understand that you want them as much as they want to purchase a policy from you. So there's a mutual connection. There's a purchase agreement that they're having. That's not only that part, it's called retention. If they're not connected with you in some way or feel that you're going to have them in your best interest, then keeping them in your company and on your books is far few and far between because it's harder. You need to have something where you are paying attention, and it's the only way to keep customers long term is to make sure that you constantly know what they're looking for and what they need. Knowing what their communication is like. What do they want to have in the future? Do they want a phone call from you every year to talk about things? Or do they want just a text message, hey, is everything good? At the end of the day, you need to plan on what is going to make you move forward, but not change who you are. Because if you're just being a fake person to sell insurance or to make a policy or make an income, it's not going to work. You can try. Maybe there's an outlier somewhere where somebody's going to make that work. But I can almost promise you, everyone that I've seen come in this industry and just drive through it and hate it and dig through it, I've seen them get far. I've seen people get $800,000 books of business, even close to $1 million. But at the end of the day, they ended up leaving. It's just not a fit. And it just ends up being a bad experience for everybody. So there you have it. I do understand now why the article says selling is a science, because it technically is a science part. Once you've been doing it for long enough, like I've been doing it, then you start to realize, like, what's the steps that I have to take to make my business where I want it to be. I hope this was helpful. Definitely let me know in the comments below, which one of these do you think you struggle with the most? What are the things that you're going to do today that you can change in that's going to help propel your business forward? If you have other questions, I'd love to answer them. Put them in the comments below. I'm Mark with Think Insurance. I will see you in the next one.